Hello, traders. Bonjour, bonjourné, guten Abend, guten Mittwoch, bom dia. Um, it's 8 a.m. Chicago time, 9 a.m. Eastern on the 15th of August. It's a Wednesday. Thanks for joining me again for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. My mouth is getting ahead of my brain. This morning, risk off. The risk sentiment is definitely risk off this morning. Euro stocks leading the pack down. Euro stocks 50 representing 50 major blue chip stocks across the Eurozone is down 1.38%. The DAX is down 1.27% or 157 points. The NASDAQ down 68 points or 0.91%, almost 1%. Crude oil taking a hit, trading down 64 cents, trading at 66.41. Okay. And the leader this morning is the bonds. The bonds are up 21 ticks, 0.46%. That's quite a bit for the bonds. The yen is up 26 pips. The 10 years up 10 ticks. And so it goes. So it's clear that safety assets, well, the euro is taking a bit of a pummeling here. It's too bad I didn't enjoy this cheaper price when I was there last week, but it's down 280 pips, trading at 113.385 in the futures. So pretty interesting stuff. Developments overnight. Really, it's about trade. The Turkish lira took some gains yesterday after the central bank intervened and also doubled its tariffs on U.S. products, cars. I believe it was cars, tobacco, and alcohol. Three things that can kill you. So the lira popped up, and also China filed a dispute with the WTO about U.S. solar tariffs on its products. So we're still continuing with this theme of countries battling each other on trade. U.S. CPI, UK CPI came in line, and there is it's Assumption Day in Europe as well. So those are the things to keep in mind. As far as what's ahead, now this morning we did get some numbers. We got retail sales in the U.S. Empire Manufacturing. Again, as I said, UK CPI came out. Ahead of us, actually in a few minutes, we got industrial production, cap utilization. Not a high-tiered figure, but we do get business inventories at 10 Eastern, 9 Central. We get NAHB Housing Market Index also at 10 Eastern. We've got gasoline inventories at 10:30. Gasoline, distillate, and crude oil inventories at 10:30 today. So just check out your favorite calendar to find out what the expectations are. Let's take a look at what we expected yesterday. Real quick here. This is the expectation for yesterday. The primary scenario is that the market might drift up towards 33.50, 34. And I'm looking for it to start rotating down on scenario one, rotating down and potentially testing that 28.20 low. Did not see that. We saw a drift up, pullback, but overall, scenario one died once we pushed through the 36.28, 36 area. That's this area right here, this low volume node. Once we push through that, we're expecting new highs. Okay, and that's basically what we got. Here we go. I gotta be straight with you here. Yesterday was just awful trading for me. Didn't wasn't like a losing day or anything, but the only real setup I saw was for scenario one. Remember, scenario one likely to drift up into 33.50 or so, and then I was looking for the impulse down. There's what barely qualifies as an impulse down, 5.75 points. So look for the short against the mid. There's a short against the mid. Mid, of course, for those who don't know, is this blue line right here. That is the high plus low divided by 2. It's the exact 50% point of the range, RTH range. So look for a mid short. There's the mid short. It tests once, tests twice. The second test is weaker. Trigger on order flow. Wait for it. Look to scale out ahead of the last low at 28.29 from 28.32-ish. All well and good. And it rotates down to the next stock zone. Stock zones didn't really move from between yesterday and today. Scale ahead of the next stock zone or the next area that the market is expected to respond. So scale out 2 ticks ahead and then stop out on the balance. Stop out up here outside of the stock zone out above the mid. That was it. That was all she wrote yesterday. And then we had this big rotation up, 11.5 points. And so I'm looking for the pullback to mid or IB. Great confluence, mid, IB, stock zone, and then underneath it, OS high, beautiful area to get long, waited and waited and waited and waited, waited, closed. That's yesterday in a nutshell. The other area I could have participated is obviously the prior day's high, which is also a stock zone as you see there, but the participation in yesterday's high is not just to push into the stock zone. I'm looking for a push through the prior high at 43.75 for a sell, a short-term sell on a small unit, like a quarter unit, for a rotation back down to that IB, looking for approximately 7 to 8 points on that trade. Just did not happen. So yesterday we got pretty decent range. We got 17 points yesterday, basically, on pretty good volume. Not great. 814,000 versus 1,100,000 is the mode. So the volume was okay. It wasn't 500,000 like it was for you guys last week. But just didn't see the opportunity in the way that I trade. Now, scalping heaven right here. Order flow scalping, beautiful. Saw a lot of pure order flow based opportunities to scalp, but really that's not what I'm focused on right now. Okay. Yep. So that's yesterday's recap. Looking at the overnight. The overnight was basically a drift through the Asian session and then started to break lower, recover to mid after the European Open, and then a strong selling spree, which is causing us to open in a gap. Double distribution profile, one distribution, then flat, second distribution, poorly auctioned area right here from about 34.50 down to about 27. Very poorly auctioned area. And it looks like it's some sort of news-based. It looks pretty strong. You can see the delta turning down pretty strong. Volume rising a little bit. The scale on volume is very poor here because it's incorporating prior history. Let's see if we can fix that. Let's expand the volume. So you can see the volume pop up, increase on the drop down as the bars close lower, that shows up red down here in the volume. You can see as bars close lower, price is making progress, but so is volume. So that's a pretty strong indication that we would get a continuation down. So here we are, pullback, and looking for the continuation lower, looking for that 2820 scenario 1 yesterday to be fulfilled this morning. Okay, so that's where we are. The other thing I wanted to share with you is this market profile chart with volume on the right. This is volume in the blue, and market profile is the colorful part. And market profile, if you don't know, is made up of TPOs. TPOs are half-hour based, or letters that get stacked. So each half hour gets a letter. So this is the first half hour, the B period, C period's the second half hour, D period's the third half hour, so on. The top of this is the top of the half-hour bar. The bottom of this D period is the bottom of the third 30-minute bar, and so on. So you get the gist of this. And then when it's organized into a profile, you have basically a histogram of time. So this is where my progression from a high volume market making scalper transitioned into a structure-based trader. I use market profile. These are based on time alone. They don't look at volume at all. And then back in 2005, about 2005, I decided to transition and structure the same kind of idea with volume profiling. I started creating these LVNs and HVNs and these kind of things, VPOCs. That terminology is based on market profile. Now, the reason I'm showing you this market profile is I want you to look at what we've done over the last several days. And what we had yesterday is a P-shaped profile. What we had the day before is a B-shaped profile. B-shaped, if it opens up here, B period, if it opens in B period and closes in P period down below, where the volume is down below, that is a legitimate long liquidation profile. Generally, we would see continuation lower in that situation. In a P-shaped profile, B period would open at the bottom, and then it would transition up, and then you would have high volume at the top with the point of control at the top of the range. A P-shaped profile indicates strong potential for short covering, and there's a good potential that price will continue higher in the next session. You can test that out. It's true. It's been around since the 80s, and some huge, gigantic traders in the bonds, S&P, corn, wheat, soybeans, meal, whatever, use market profile very heavily. Okay? So this isn't like some sort of voodoo type stuff. It's basically a way of organizing the market. And market profile is not a trading system. It's just a way to look at data in a more statistical way, as opposed to a candlestick or a bar high, bar low, or price action based. What I want to do here, though, is I want to merge these profiles because they've been overlapping each other. We've had a B-shaped day. We had a balanced day. We had a B-shaped day. When we had yesterday, we had a P-shaped day. So what we have is balance that is really participants just being washed back and forth with whatever it is, news, trade-based news, or whatever. And what we find is at the bottom of this, maybe this is a horrible color. Let's switch to something a little more flashy. What we find down here is that we had an excess low. So down at the 2820 from 2 days ago, we had a decent excess low, and we started to push back up. What we have at the top is a very poor high. Can you see that poor high? Can you identify that poor high? Multiple letters right at the top. One tick from the top. So you can see that there are 4 30-minute periods that ended up having the same high here on this profile, with one period poking through. That's a weak high. That's an excess low. So for all intents and purposes, even though the market's trading down here right now, this red number right here is, well, no, this number, it keeps moving. That number is where we're trading currently. So what we've done is we had a tremendous opportunity yesterday to push out more shorts and start to fill this gap that we've left behind. So we have this gap zone up here, and if you're getting the FT71 master levels, it's marked on there. We had a tremendous opportunity to push through and get to 47.75, which is the gap mid in this area. We didn't do it, and we're rotating down. So what that tells me in a bigger picture, this is a multi-day picture being put together. This is the narrative or the context of what we're looking at. We finished yesterday up here. The little asterisk, the red asterisk you see there, that's where we finished, and we're opening down here this morning. This is really weak. This is really weak behavior, and the profile is skewed to the upside with a weak high. This profile is likely to catch quite a few people to the short side because of the way it's stacked. Most people reading this 3-day balance coming into yesterday, actually the 2-day balance, would have bet heavy, in my opinion, on the break to the 43.75 break yesterday. Was a high probability. It just couldn't do it. Now here we are, 20 points below it. So the market working itself through these levels is going to be a little bit rough, with 28.36 again being the over underline for today. Somewhere 35.36, if you recall, yesterday was an LVN. It was an LVN for Monday, that area. So for me, what does that mean? I'm going to be looking short. Any push up, I'm going to fade in a mean reversion pattern, outside in type trade, to sell to the short side. And that's what I'm looking for today. And I'm just explaining to you rather than telling you, yeah, I'm looking short, like I often see on StockTwits and on Twitter and so on. I don't know what the basis of that is. That's the argument, okay? And the attraction, the price, the most attractive price up here is 28.40 in volume and 28.39.50 in TPO. I stick with volume. Volume is the energy behind price. Price is price. Volume is what gives price meaning. Okay, that's my opinion. So what am I looking for today? I'm looking for a market that is like that has short inventory. And I'm expecting it to revert back. So I'm looking for an open auction that is somewhat turbulent this morning. I'm looking for it to start moving up, and I'm looking to short somewhere in this area. I'm looking for it to fail back through, and I'm looking for a break of the opening swing, a break of the overnight low, and a push through to 12 this morning at some point. That gives us quite a bit of range, about 20 points. That's what I'm looking for as a primary scenario. I believe that buyers are likely to see this as cheap. Remember, we're in balance, okay? So even though we're below yesterday's range, even though we're way below yesterday's close, we are still in balance. We're still in this balance right here. So if I extend this out, let's move this back to where it belongs. Extend this profile out. We get the same profile we saw in the market profile chart. You can see that it's got a weak high, very pointy at 40, and it tapers off at the bottom. We're still opening in balance, so I'm expecting turbulence. I'm not looking for a drive. I'm looking for responsive because we're overall in balance, but I'm expecting it to fall out of balance. This has had plenty of opportunity to push higher and is unable to, and it cannot attack the gap. It has not been able to successfully attack and take over the gap. I'm looking for price to continue lower to seek stronger buyers as it moves down. So that's the primary scenario by far. Now, let's say that scenario completely fails, which is very, very possible. It has a 50-50 chance of failing. let's say it completely fails, that's a pretty good indication. So the secondary scenario, we drift down, we continue the upside down cup or cup and handle formation or whatever it is, and then we start to push down, and then we get an impulse up, and then we start to drift up. The first area of resistance is likely to be this 35.36 again. If it takes out the 35.36, look for 40 as the next area. Otherwise, we're looking for it to form a double distribution profile that looks something like this with a lower low. For today, that'll be scenario number 2. Scenario number 2 would be test down, find buyers quickly, and rotate back up. Why am I considering buyers in this? Because the overall trend is still to the strong side. It's still to the upside. We have moved away from 27.20. I don't want to have to pull up a composite here to show you, but we have tested the living crap out of 27.20 and broke through 27.45 and have broken through 2800, and we are still up here at 2800, near the all-time high 2884, I believe. So we're nearer the all-time high than we are the middle of that huge point of control from the sell-off starting at the end of January, beginning of February. That's the big picture context and narrative, and now we're playing today within that, a small slice of that. And the small slice of that is saying, look, there's a fair amount of weakness here. And yesterday was the chance for buyers, was the golden opportunity for buyers to take it all back, and they weren't able to. So today it's opening in a gap down, and I'm looking for failure to continue higher, and I'm looking for it to start rotating back down. 2812 is likely today. That completes the daily range, but ultimately 2800 is likely to invite buyers. Does that make sense? Have I lost you all? So that's the big picture. So if I'm putting on size, if I'm putting on, 50, 60, 80, 100 lots, I need to have that backstory to back up what I'm seeing in the market. Not what I want to see, but what I'm seeing in the market. And that allows me to firmly hold on to that much risk, which of course is adjusted to the account size. It gives me all the reasoning to hold that big size and make real money if it continues, if it plays out, or lose some money if it doesn't. Good luck today. Hey, by the way, it's your trading plan. It's your risk. Don't take a short blindly off the open and say it was he who said so. You're trading your own plan. I'm just sharing my sauce with you. Make your own sauce because you're going to end up eating it. Good luck.